9 things you should consider before getting a loan. Taking out a loan is tricky business. You want to make sure that you're getting the best interest rate possible and that you understand all the terms. There's also so much more to consider than just, the rate and your credit score. Here's some things to keep in mind before applying for a loan. So, what is the purpose of the loan? The first thing to consider is what the loan is for. This can help you determine if it's a good idea or not, and also give you insight into how much credit you actually need. Second thing to think about is your options before getting a loan. Do you have other methods or avenues of getting the money other than, taking out a loan? If there are other methods available in conjunction to this one, use everything at your disposal before jumping into a loan. You don't want to take out more debt than necessary. You hear a lot of people saying, this debt is good and this debt is bad, but in all actuality, unless you're Elon Musk or unless you're one of the big wigs that can afford to pay back hundreds of dollars of loans, I wouldn't recommend taking out constant loans. It's just not a good idea. So another thing to consider is how much money do you need to borrow? How much money do you really need to borrow? This is a hard question to answer because it depends on your income, your expenses, and credit history. If you're just starting out in the world of personal finance and have no idea where the money for your loan is to pay back your loan is coming from, or if it's coming in at all, this is a very difficult and potentially dangerous avenue to go down. Banks and credit unions not only accept and trust that you can pay back the loans that they give you with interest, on the agreed upon timeline, but you don't want to end up paying more interest and just spending a lifetime paying back a loan that could have taken you a few years. Nobody wants that. The next thing you need to know is what credit score do you need to obtain to get your desired loan. It's important to know what your credit score is before applying to the loan. Of course, the higher your credit score, the more money that you're going to be approved for on the loan. The lower your score, the less chance you'll have for getting approved for the loan. If you don't know how much money is available in the loan, or how much money is available in loans to you, then you aren't going to know how much money that's going to be available for you to take out and how much you're going to be paying back in interest. When it comes to your credit score, interest and your credit score are best friends. So it's very important to know how much you have, or how high or how low your credit is. Your credit score is used by lenders to determine if they can give you such things as mortgages and if you're going to even be able to pay back, auto loans, mortgages, student loans, etc. Next thing you got to know is, do you understand all of the fees associated with a loan? And this is where getting somebody who knows something about loans, like a notary public, is going to be helpful. You can get a notary public. They do loan signings. So 9 times out of 10, depending on your state's laws, they're going to be able to explain the terms of the loan with you, go over it completely, and do the signing for it. Trust me, it's painless, and I know somebody who does it because it's me. So yeah, if you contact us, we'll be more than happy to explain the terms of your loan and everything. So another thing that you have to know is how much interest will you pay on the loan. The interest rate, of course, like I said, is determined by your credit score. It's also determined by the market. It's not set by the lender per se. Rather, it changes depending on how much risk you pose to them. Some will accept people with low credit scores without collateral, and some will with collateral. When it comes to bad credit money lending, is a whole world in and of itself, and you got to be careful because some will use predatory methods of getting you to sign that loan with ridiculous interest rate in it. And a wise man once told me that When somebody's desperate, of course, they're not going to be looking at things like interest. You know, if your daughter needs heart surgery, you're not going to be looking at things like interest. And sometimes I think it's a little dishonest for people to be like, okay, well, make sure you're looking if you have bad credit and your daughter needs a new lung. You need to take out money for that for some reason. To go down the list. It's like nobody's realistically gonna do that. In an emergency situation, desperation, you know, nobody's gonna do that. But if I'm saying, if you can find the loan from somewhere else, if you can go down a different avenue, then I recommend doing that. But the interest, when you have bad credit, it's going to be a world in and of itself, a whole world. Now, another thing you have to understand or keep in mind is, can you afford to pay back the loan on time? Before you get a loan, make sure you can afford monthly payments. Yes, they do require you to pay monthly. This is especially important if your credit score is low or if you don't have any money saved up for emergencies. If this sounds like something that could happen to you, it is critical that you wait until you have money saved up before you take out a loan. You should also be aware of other options available. If you don't have an emergency fund, say something breaks down and you have to miss a payment on your loan, that can be very detrimental to your credit score. So make sure that you have extra money set out just in case you do miss your mortgage, just in case something does happen and you have to take money out. You're not dipping into the money that you had saved up for your monthly payments for your loans. So that is going to be another huge thing. And you also want to make sure all of your personal finances are in order before you get a loan. A good payment history with other creditors, such as utility companies, before applying for any type of loan, whether it's going to be used, for buying a house, buying a car, buying a business venture. And a lender wants proof that money is coming in and will be able to cover all expenses over an amount of time. They don't want somebody who's not going to be able to pay them back, and like I said, who's going to take a lifetime. Some of them don't care, but the fees, you don't want it to take a lifetime for it, to pay them back. And they want to make sure that your money is going to be actually spent towards a business instead of just fun money, which could potentially cause problems not only for them but for you down the road when trying to get approved for another loan. So another thing you want to keep in mind is, what are the limits on withdrawing funds, making payments, and using the account for your specific type of loan. When you're looking for a loan, it's important to know what limits there are on your account. And on your account in general, how much money you can put in, how much money you can take out on a daily basis. Your general limits is going to be one of them. So if you have a bank that says you can only deposit $20,000 per month, and you get approved for a loan for $50,000, and you try to put that in, they're just going to reject it. So you got to make sure you want to make sure on your methods on depositing your loan and stuff like that. But make sure one of the little things is making sure that of course, if your bank will allow you to deposit that much money. So yeah. And also some loans have a limit on how much you can borrow. Others have a limit on how much you can withdraw. And how others have a limit on how often payments are made. In addition, some loans, may only allow some loans may only let some type of transactions through the account, and others not so much. It all depends. There are so many factors when determining your loan and what bank you go through and who you go through in general. Another thing is, you want to be careful about getting a loan that's not right for you. A loan is not the same for everybody. Some people will get a great deal, while others might end up paying more than they should. It all depends on how much risk you want to take on and how much money you can afford to lose if something goes wrong. When it comes to loans, of course, there are different types, like credit card, credit card, such as student loans, mortgages, auto loans, personal, business. It all depends on your situation, of course. But I hope I was able to help you understand the basics of a loan in this really quick guide. If you have any further questions or you would like a loan signing expert, aka a notary public who's good at loans, then you can contact me and I'll be more than happy to help you. So yeah, feel free to reach out. Toodles.